Well, again, good afternoon, everyone, and welcome. Thanks for joining us today. My name is Jason Derbyshire, the Business Development Manager with TradeLog Software. And today we're going to be talking about taxes for active traders. And we have two very special guests with us today, experts from GreenTraderTax, who are going to talk with us about some key questions and topics that affect active traders when it comes to taxes. Joining us is Robert Green and Darren Neuschwander, CPAs, over at GreenTraderTax, our website there at greencompany.com. We're very grateful that Bob and Darren were able to take time out of their schedule to be with us this afternoon. These guys are experts when it comes to trader taxes. They do nothing but work with active traders and investors, helping them file their taxes. GreenTraderTax is celebrating 30 years of business this year. So these guys really are top-notch. And I know this is a busy time of year for you guys, Bob and Darren. So we're really thankful that you could take out some time from your schedule to join us today. We're glad you're here with us. Now, before we turn things over to Bob and Darren, I just want to give a quick overview of what we're going to be discussing today. Kind of four main topics that we're going to be touching on. First, we're going to talk a little bit about the 1099-B and how that fits in with the big picture when it comes to filing trader taxes. We're going to talk about Section 475 MTM elections and how that affects active traders, how it might be beneficial, some of the things involved with that. We're also going to talk about tax strategies or deductions that can benefit active traders. And then finally, we'll talk a little bit about using CPA firms. What's the value of using a specialized CPA firm? These are all questions, topics that we here at TradeLog often hear from active traders. And so we've invited Bob and Darren to join us this afternoon to help answer some of these questions and provide some information and guidance. So again, Bob, Darren, welcome. And at this time, I'm going to turn things over to Bob so that he can take it from here.
Thank you very much, Jason. Regards to Dave Ike, too. And I'm glad that my partner, Darren Neuschwander, could make it. He's real tied up as head of tax compliance for our firm. We handle over 1,000 trader tax returns. These are educated traders who most of them use TradeLog, certainly if they trade securities. But there are so many nuances, and you can use the best tools, but the results sometimes have important questions, pitfalls, and opportunities for much greater savings. So let's see if the screen is up here. I'm bringing up our website now, and that looks like it's okay. Darren, thanks for joining us. How you doing today?
Hey, Bob. Thanks. Glad to be here, and appreciate TradeLog and Jason and Dave for inviting us to be part of this presentation today.
You know, Darren, when I think of the first topic, the cost basis reporting rules from the IRS, the new beefed up 1099-Bs, and what that means for taxpayers, I think of you because you're the one who broke that story. You're the one who first came out and said, Bob, listen, I'm on the AICPA task force. We have a problem here. There's a lot of promise on what the new regulations and rules are supposed to deliver, but there's equally a lot of snags and snafus and apples and oranges. And you and I, you got my full attention, and I jumped into it. We've written blogs. And what's the result? We have a quick link here at GreenTraderTax. Green NFH is our CPA firm, and is Neuschwander, that's Darren. So on the quick link, it's always good to come to our site. It's a lot of content. You go to cost basis reporting. And what have we done with this story? Well, look at all those blog articles, webinars, videos, media coverage, Wall Street Journal, Barron's, Wall Street Journal, Barron's, Active Trader. Darren was on the AICPA task force. We had a petition to rally Congress to fix the rules and regulations. What's the solution? TradeLog. And for clients who need further help, TradeLog accounting services. And for the final help, our tax compliance service. So these are rules that Congress wrote to close the tax gap. They thought that traders were either cheating were making inadvertent errors on their tax returns. The IRS only got a 1099 with proceeds on stock. They didn't get options. They didn't get purchases. They didn't get realized gains and losses. And all they saw was this trader had $10 million of turnover. And a lot of traders didn't even file tax returns thinking, hey, I have a loss. Why should I have to file? Now, they did get nasty bills years later because the IRS has no idea. The IRS wants to know. So they told the brokers, you need to report the cost basis and the average holding period. So between the two, and wash sales, so that we can more or less figure out the gain or loss. Well, like a lot of things from the government, rules are phased in. So it started in 2011 with securities only, and then in 2012 they added corporate actions, and they're supposed to add options and debt, and they've had to push back some of those things over the coming years. It's not a full picture. So what are you getting? Did we go from no reporting to full reporting? The answer is no, not by a long shot. So look at this last blog we did. Caution, downloading securities Form 1099-Bs into TurboTax often leads to incorrect tax filings. Really what this headline can say is you can't rely on a 1099-B to file your taxes. It's not the full picture, and there are apples and oranges. The 1099-B reports wash sales just for that one account based on identical positions, the same stock symbol, the same option symbol. It does not do what taxpayers are required to do, which is report wash sales across all their accounts under their Social Security number or any disregarded entities' ID numbers, joint accounts, individual accounts, and IRA accounts. That's a huge problem. Even when they phase in all the add-ons, 5 years from now, 1099-Bs will still not be reliable because they won't do wash sales across all accounts. And the rule is that taxpayers need wash sales based on substantially identical positions, which include stocks and options at different strike prices. Well, guess what, folks? Really, we don't know of any solution out there that does that except for TradeLog. Now, TradeLog downloads the actual trades, not 1099-B info. By the way, you can't download a 1099-B into TurboTax. You download a file, a profit and loss report, that's used to make a 1099-B into TurboTax. So you're basically downloading the wrong information with wrong accounting. So you have to reverse engineer that all. Who wants to do that? Stick with the actual downloads. Now, we want TradeLog to continue working on reconciliation to 1099-Bs, and we want a way to get into 1099-B details and reconcile them line by line. That's not possible yet. What we have with TradeLog is a reconciliation and a big adjustment at the end of the day. And that's been fine for this last year, 2011, 2012. But I know, Darren, that you want to have more reconciliation for the future. So we want to stick to what's right. That's TradeLog. We want to do the job right for FIFO. And we would like to reconcile to 1099-Bs and point out the errors, but the last thing we're going to do is what way too many accountants and software providers are doing now, and that is to give the IRS what they think they want, 1099-B data, and file wrong. Why should you overstate your gains by 100,000 or understate them by 100,000? Why would you report the wrong number? So, Darren, what's your take on all this? Do you want more
My take is
adjustment information, and where do you think we're going with this?
we are going to have to eventually have more adjustment, and we're working directly with TradeLog to try to get a more overall adjustment on a line-by-line basis, and that's something we're just going to have to continue to work with TradeLog in conjunction with to try to get an overall software solution on this, because the problem in itself is not going to go away. The 1099s, there's just different reporting for the 1099s as opposed to what the taxpayer, him or herself, has to report, and that's not going to change in the near future. So you must continue to utilize TradeLog to combine all of your trading accounts for properly calculating wash sales, and we just need to try to work to develop to where we can do a line-by-line reconciliation to what actually is being reported on these 1099-Bs to what's actually being pulled inside of TradeLog to see what the overall differences are. And that's just going to continue to be a work in progress. I would love to say that we have an overall solution to that right now, but we don't. And the IRS and even practitioners know. I mean, just yesterday, the basis reporting for debts and options, a lot of practitioners actually put in a request to have that even pushed further because that's not implemented yet, but they're seeing more and more issues with that. So overall, there is still a consensus that there's some overall issues with the basis reporting being given to the IRS, and it's still a work in progress.
And we hope the IRS is not matching up too many of these with the adjustment that we make on the 8949 for the reconciliation. Things do match the 1099-B. But I really encourage clients to consider our TradeLog accounting service. So if you come to our home page, first of all, we're the #1 reseller of TradeLog because we think it's really the only solution that works. So you want to get TradeLog through our site, and look at this button, TradeLog Accounting Services. We have a highly trained CPA who does TradeLog accounting all day long with all the different brokerage firms. And many of you have multiple brokers, and you may use the program and do the downloads, but you may have some questions. Why not avail yourself of our service, which can really give you the confidence that you need, because you might have a big adjustment and you really want to understand what it could be and want to know that you're filing in confidence that your returns are right. And you want to let the IRS know that you had it professionally done. So that's important to consider. Now, let's move on to the next topic, because we have spent full webinars, both TradeLog and GreenTraderTax, on these issues, and people should refer back to those. Remember, one good thing to consider is the Green's 2013 Trader Tax Guides. There's a lot of information on our site, and we've powered a lot of information on other sites, including TradeLog. But this is the premium content. You can get it 50% off now for the 013 guides through January, or you can get the 014 guides at full price. You buy 013 and 014 together. And all of these concepts are well explained in the guides, example 8949s, example footnotes to explain the differences, and much more. So the next topic that we're going to discuss today, and let's bring up there was an email on that. Those are some of the questions, by the way, that were submitted. Just did the first topic about the 1099-Bs. Now, is Section 475 mark-to-market ordinary gain or loss treatment better for traders? Should you consider that? You know, that reminds me of how our relationship started with TradeLog in, I think, around 2000. GreenTraderTax got very big in the internet when Congress changed the rules on Section 475 mark-to-market accounting. It's a new, go into the Trader Tax Center. First chapter, Trader Tax Status. Second one is MTM accounting, mark-to-market accounting. Congress recognized traders in 1997, and they opened the doors to Section 475. Only dealers could use it, ordinary gain or loss. They said if you're a business trader in securities and or commodities, which really means futures, you can get out of that puny capital loss limitation of $3,000 a year. You can get out of those onerous wash sale rules, which give such a headache on the Form 8949. You can elect 475 on a timely basis by April 15th of the current year, or if you form a new entity within 75 days of inception. Big takeaway, consider an entity. That's a big business for us. That's what you should do if you want 475. I told everyone in 1997, listen, if there is ever a tech wreck, people said there could be, and you lose a lot of money, don't you want an ordinary business loss and to get a huge refund from Uncle Sam? You don't want to get stuck with a capital loss carryover. Tens of thousands of traders got stuck with capital loss carryovers, some 10,000, 100,000, $1 million. Some are still trying to use them up from the tech wreck. This is tax loss insurance. It's free. It's like getting a huge premium on your house for free. Now, we don't recommend it for futures traders because then it's an expensive premium. They would have to give up the lower 60/40 tax rate. So this is really recommended for securities traders. This is the biggest problem. They can't deduct things. So this gives them ordinary loss treatment. Darren, you probably have so many tax returns where clients have taken our advice. And we told TradeLog to build it into the program, to build mark-to-market elections in there so you could turn on the switch. When you buy TradeLog MTM, you could turn on the switch. You can use the same program for your investment accounts on the cash method, but for your mark-to-market business accounts, hopefully in a separate entity, you can turn on the switch for mark-to-market. Darren, tell me about like some of the returns you file, the NOL refunds, the power of mark-to-market.
Mark-to-market is trader insurance. And what I mean by that is if you're profitable with short-term trading, whether you do or you don't have mark-to-market, basically your gains are going to be taxed at the same tax rate. Short-term capital gains are taxed at ordinary tax rates. If you have mark-to-market, your gains are going to be taxed at ordinary tax rates. Now, let me preference, I'm ignoring the wash sale issue at this moment. But if you have losses and your losses, for example, are $100,000 for a given year, if you don't have mark-to-market, then you're subject to the capital loss limitation rules. And of that $100,000, you're only going to be able to deduct $3,000 on your current year tax return. The balance of $97,000 is a capital loss carry forward till the following year. You can't carry that back. You can only carry that forward. Whereas if you elected mark-to-market accounting and you qualified as a trader, that $100,000 is an ordinary loss that can be fully deducted in the year that you incurred the loss, can be offset against any other sources of income. Say you're married and your spouse has a W-2, it can be offset against that. If your overall loss exceeds all of your other sources of income, or you don't have any other source of income for that year, you have what's called a net operating loss, and that can be carried back to the 2 previous tax years to request a refund of taxes that you may have paid in those 2 previous tax years. So it really is trader insurance. I mean, when you buy insurance for your home, fire insurance in case it burns down to protect you, well then in a sense, that's what mark-to-market is. If you're profitable, excluding the wash sale rule, it's going to be basically the tax is going to be the same. But having a bad year in trading and having mark-to-market in place is going to save you because you're going to be able to go back and get some taxes from the previous tax year. So it's very beneficial as a trader.
Thanks, Darren. Now, it's not every trader should jump into mark-to-market, plus there's a lot of myths about it. People should go to our blog. We did a recent blog about the most common mistakes that traders make, and some of those have to do with not filing 475 and not understanding the rules and the myths about it. You can still keep your segregated investments to buy and hold and get deferral. It only applies to your business positions. And, okay, you have to mark to market at year end, but a lot of traders go to cash at year end anyway. Now, if you have a large capital loss carryover because you're finding out about mark to market too late, or you have large capital loss carryovers from segregated investments, you want capital gains. Those are tax-free to you until you use up your capital loss carryover. When you elect Section 475 mark to market, it becomes ordinary gains. It doesn't go on Schedule D. You would rather have capital gains on Schedule D to soak up capital loss carryover. So we recommend a new entity. It's a perfect time of year to set it up. And by the way, you just go to back to our quick links. If you're going to avail yourself of trader tax status benefits, deductions, 475, you really want to house it in a new entity. Look, new traders want to do that too. A lot of resources for you. A lot of these strategies here. And if you go to our entities page, we're telling you right off the bat, it's a perfect time of year to do it. And this is the big strategy. It's right up on our site. You can elect. It gives you the best opportunity to elect 475 and the best opportunity to exit from it if you ever wanted to. For example, you got a huge investment capital loss. It's all about matching the right category of income. So if you form a new entity, here's your situation. You have a large capital loss carryover or year-to-date capital loss. You want capital gains, but you don't want any more capital losses. You've already dug yourself too big a hole of capital losses. You need a capital gains ladder to climb out of the hole of capital loss carryovers, but you want 475 as a floor so you don't dig a bigger hole. Very simple. When you form a new entity, you have 75 days from inception to decide. So we do that with you as part of our entity formation service. So many clients have saved the day with that strategy. If they made big gains, they skip mark to market, it's tax-free. If they made big losses, they elect mark to market, and then they get a huge refund. It's win-win. And then they might need a do-over entity, and that's simple with a general partnership. We're throwing a lot at you here. We're just touching on it. But bottom line, if you want to think about mark to market at this late point in the year, you need a new entity because the election deadline as an individual is April 15th. You want that insurance for your house, and Darren, the trader's houses burn down a lot more than regular houses too. That's for sure. We've seen that. So definitely consider that, the mark to market and the entity. Let's go into the next category topic. Are there any tax strategies or deductions for active traders that could benefit you? Absolutely. The name of the game is if you're trading actively, you want to know, first and foremost, let's go into the Trader Tax Center, Chapter 1, Trader Tax Status. The first step to tax saving is to qualify for this Trader Tax Status, which signifies business treatment of trading gains, losses, and expenses as opposed to default investment treatment. Now, you need to elect the 475 to get ordinary losses, but you can only do that if you have Trader Tax Status. Why is business treatment so good? Well, in America, businesses get the golden goose. They get the full ordinary loss deductions, including home office, education, startup expenses, margin interest, much more. If you're a default investor, you get a few deductions. You don't get home office, you don't get education, you don't get startup. You get a few expenses if you use your computer 100% listed property for investing, but it's very limited. You can only deduct it in excess of 2% of adjusted gross income. It's not deductible against AMT tax. There's further reductions under the Obama-era tax hike changes. A lot ends up on the cutting room floor. The business trader does so much better, saves on, average $5,000 more, $8,000 a year. Plus, mark to market can save you tens of thousands more. And when you have the entity, You can do the AGI deductions for retirement plans and health insurance and save another $3,000 or more. We're talking about real savings and real protections and insurance, and you need to qualify. Darren and I were just interviewed by the Wall Street Journal this morning. Jason actually was on a conference call with us, and he heard it. Because this Endicott guy lost his case. He was an options trader, and he really tried to bamboozle the IRS. He was an investor. We would have said no to Endicott, but you need to get over the hump of qualification, and that's the ticket to unlock so much. Darren, I know that you and I sit at the gate with the gatekeepers on that. I do it in the consultations, and then you do it when you handle compliance. Each one of our CPAs analyze each client very carefully, provide an analysis. And how many clients do you think that we say no to, Darren? I mean, I know that there's some big numbers on both sides, but there are times where people go in a consultation with me and it looks good, and then we see the proof of the pudding and it's not. What's the latest, your latest experiences with that, Darren?
I don't have an exact percentage as far as the number of clients that do or don't qualify. Everybody's facts and circumstances are different. As Bob mentioned, we do have to take everything as a whole. Just because you may qualify as a trader for 1 year doesn't necessarily mean that you're going to qualify for it as a trader for the next year. So it is really something that we have to take on a case-by-case basis. And one thing, just speaking on trader status, I'd like to mention, I know we're getting awful close to the extended due date for 2012 tax returns, but if this is your first time really hearing about trader status and you never have filed as a trader but you think maybe you could and just didn't, there's a possibility of going back and amending your prior year tax returns to claim trader status. So it's definitely something to look into. And after October 15th, we will actually open back up an opportunity on our website for, we charge $99, and that gives you the opportunity to securely upload your tax information to our share file server, and I will actually review your tax return that you either prepared yourself or had another professional prepare, and we'll see if maybe you qualified for trader status, if there's an opportunity, or even if you know you qualified and just want a second opinion of the overall preparation. Be happy to help with that too. We will open that service right back up after the October 15th deadline passes. So Bob is showing you that on our website right now, so please take note of that particular address and take advantage of that. We've had many clients that actually have tried to prepare their returns themselves and then come to me. I've taken a look at it, pointed several things out, and they've actually asked us to go back and prepare the whole return or amend the return. So there's some value there for $99 just to get a second opinion to make sure you're not potentially leaving some money on the table with some open years. It's a good investment, so take advantage of that.
A lot of people use local CPAs and tax storefronts, and they really botch things too. So that's great that you'll do that again after October 15th. Let's look at the next point. Now, I know, Darren, you see all types of different deductions. We're not talking about, most traders have a home-based business. They don't have employees. The expenses aren't crazy. Endicott, again, he tried to deduct $300,000 of margin interest on investments. You can see how the IRS wanted to say no. Most of our clients' expense levels are pretty reasonable with the computers, the software, the chat rooms, the education. Education is a real big one, and the problem is that a lot of clients get education before they start their trading business. We have a whole section of the Green's 2013 Trader Tax Guide on that. We've had webinars and blogs on it as well. It can be a challenge. Don't get the wrong information from people. Don't go to these multi-entity schemes. Don't try to do what's not possible. That will just get you into more trouble. Let's look at the next point on the board. So again, for the tax strategies for deductions, you want trader tax status to get business deduction treatment. It unlocks the home office education startup. And then you want to really maximize your deductions with the right treatments, the right elections, like Section 179 depreciation, how Section 195 works. It's quirky, cash method, accrual method. It's not that simple. There are a lot of nuances. This gets right into the value of a specialized CPA firm, because what you can deduct, how you deduct it, what you can't deduct, how to avoid red flags on your return makes a world of difference. If you start deducting autos as a trader and you don't really have a reason to deduct an auto, that's a red flag. We'd rather you take a few more dollars and travel. So many people invite audits by applying the strategies wrong. They say, okay, I'm a business trader. And let's, by the way, go back to the common mistakes on that blog. That was a pretty popular blog, and we did a webinar with it too. A lot of these things get you audited. You miss out on all sorts of benefits. And first of all, you need a CPA, and you need a CPA really experienced in trader tax with high ethics and a great reputation like our firm. So a lot of people miss trader tax status. Darren said you can go back and amend it for a few years. You can't amend 475. People miss the boat on 475. They figure, I missed it for good. Let me wait to use up my cap loss carryovers. Big mistake. They keep digging a bigger and bigger hole. Again, our firm can help you navigate that decision in the best manner possible. A lot of accountants, people who self-prepare, botch the Forex elections. They don't know that they can file a capital gains election. They don't know they have a shot at lower 60-40 tax rates. They either overpay their taxes by 12%, or they get stuck with a capital loss limitation. Not just CPAs, but a CPA firm like ours. A lot of traders miss forming an entity. They don't understand all the benefits it will bring to them. If they set up an entity, they set up the wrong type of entity. Maybe they set up an LLC in Nevada when they should have just set up a partnership in their home state. This one right here, Darren, why don't you take us through some of these tax reporting errors that local accountants, local CPAs, self-reporters will make a lot of these mistakes, and a good CPA firm like ours won't. So Darren, maybe you want to take us through some of these. You see the tax reporting errors I have up here? I don't hear you.
I apologize, Bob. I was trying to address some of the questions that we had.
Good.
Some of the issues that we're seeing that other CPAs are doing, or maybe someone that self-prepares their return. The biggest one we see is number 5, is reporting trading gains and losses on Schedule C. If you really want to get your return audited, the fastest way to get audited is to do this one incorrectly. If you're a trader, whether you have mark-to-market or you have not elected mark-to-market, your actual sales proceeds and cost basis never go on Schedule C. If you're cash basis, they're going on Form 8949, ultimately ended up on Schedule D. Or if you have elected mark-to-market, they go on Form 4797. It's very clear from IRS publication 550 that this is the way it should be prepared. And we still see some people saying, I'm a trader, I'm in the business of trading, and Schedule C right up at the top, it even says it shows my sales proceeds and my purchases or my cost of goods sold. But that's not how a trader Schedule C is prepared. The IRS is going to be looking for the 1099B proceeds for the trading of your securities. They're going to be looking for it either on 8949 or 4797, not on Schedule C. That's just part of the IRS computer matching systems. If you don't do that right, you're automatically going to get a CP 2000 notice. That's the computer matching. And you're automatically just going to set yourself up to open up other things that may or may not be correct with your return. So that's a big no-no, big no-no. The other one, number 6, is the transfer strategy that we have. Now that goes directly along with number 5. I said your overall gains, they get reported on 8949 or 4797, not on Schedule C. If you're actually claiming a home office, to be able to get benefit of the home office for a sole practitioner on Schedule C, you have to have profits on Schedule C. Well, if you think to yourself, Darren, that makes absolutely no sense. How am I going to get profits on Schedule C if the only thing I'm putting on Schedule C is my expenses from trading? Well, I understand what you're trying to understand is if you are profitable in trading, and we hope you are, report your trading activity itself on 8949 or 4797, and we then transfer a portion of your trading gains to Schedule C as other income to basically zero out your Schedule C expenses, and then also be able to take benefit of the home office deduction as well. We're not changing the overall taxation of how the income is taxed. It's more or less connecting your Schedule C activity to the actual trading gains that are being forced to be reported on other schedules, because that's how the IRS is telling us, per their publications, a trader return has to be prepared. We do that with all of our profitable traders, so we can truly unlock the benefits of Section 179, being able to write off your equipment all in the year of acquisition, and also being able to take full benefit of the home office deduction.
Now, Darren, let me just jump in for a second. You know, even though we have some of this information on our site, and we have examples in Green's 2013 Trader Tax Guides, you and Adam prepare the examples, I prepare the content guide. There are so many nuances. We have special add-on strategies with entities that are much more nuanced on these transfers. And I just don't think anyone else in the country even knows how to do any of that, let alone other local CPAs or even some trader tax CPAs, which there are a few. Our main competitor is not a CPA firm. They're the ones that recommend those dual entity schemes, C Corps, LLCs, and sell you all sorts of stuff you don't need, even if you're not a business trader. So we don't have to go through all these now, Darren, because we've done separate webinars on it. We're going to move on to more, but this next one, I know that we recommend the TradeLog, and you could just spend hours walking through all these botched things that others do that we don't do. In general, Darren, what do you think of, the pride of being a CPA, and what's the difference between a CPA and just a general tax preparer or an EA?
Well,
and I'm going to show people, by the way, some of that stuff on our website here, the value of a good CPA firm.
a CPA is required to continue their overall education throughout the term of their practicing career. Each state requires a CPA to do so much in minimum of continuing education. And that in itself is a positive thing, because you're constantly being, I don't want to use the word forced, but to some degree it is. It's forcing you to stay current on material. And let's face it, taxes are constantly changing. Every year there's something new, something's being expanded.
Obamacare.
Yeah. The basis reporting, everything, the new surtax, Medicare surtax that's coming out for this year. I mean, it's ever changing, and unless you're able to stay on top of that, which our firm is, we utilize CPAs that constantly are going through continuing education. In fact, Bob and I were just doing some continuing education last week. That's the difference with a CPA. You know that they're staying current on the material, where someone that's just a practitioner that's just making money off the tax return and really may not even be there for the rest of the year, that you can actually go to them and contact them, that is a huge benefit. If the other thing with the CPA is if you are actually, your return is selected for audit, they can represent you. I actually had an IRS audit that happened on Monday of this week. The IRS agent came to our office. I sat down with her for several hours, went over trader taxation, why this client qualified as a trader, showed her our work papers of how we documented everything. Today's Thursday. I received a letter from that particular agent basically closing the case with no changes at all. That's the difference with working with a CPA as opposed to just a general practitioner.
And Darren, let me just jump in on you for a second there to give you kudos on that for doing a nice job. We have extremely few audits. There are others who ask us to help them after they've botched things, but I really like the way that worked out. That I think you said it was a Wisconsin client, and we transferred the case to close to our office in Alabama, which is a small area with not a lot of revenue agents, and you're developing a great rapport, respect, credibility with the IRS there, and we don't have to educate them every time on an exam, whereas all around the country that's usually the first problem, is educating an agent. So that worked out really great, and when people work with us, we stand by them to the very end. We don't give up. We are leading the charge of trader tax law.
That's right. That's key. I mean, part of what we do with our preparation process is we're not just taking numbers and putting it on a tax return. We're actually supporting the numbers, doing our own due diligence. So in the event there is a question on your tax return, we've got that information to provide to the IRS. I actually had a client that had a tax return filed, showed a loss this year, and it was with the state of New York. The state of New York contacted the taxpayer, said, let us see the support where you're getting all of this. The client contacted me, engaged us to actually represent them before New York. I gave the agent in New York our work papers of where we came up with these numbers. She took a week's vacation. I called her the next week. She said, I've got your information, went over it. Everything's good. I'm releasing the refund for the taxpayer, no changes. That's the difference in using a CPA that does this day in and day out as opposed to just a general practitioner that may not understand it.
Well, again, Darren, kudos to you because you and I have co-managing members, and I'm more involved with the writing, the speaking, the consultations, the entity formations, but you're head of tax compliance and running the production in our firm, and you're great at it. And we have the latest Cloud 9 servers, all the best practices, all the best tools. And I know you've been a stickler for organization, paperless, filing, and our clients know it too because we have deadlines. Everything is, we cross every I, dot every I, cross every T. Why does that come in handy? 1, 2, 3 years down the road, something comes up. We're super organized to win. One of the biggest problems in IRS exams are people who are disorganized and they lose all credibility with the IRS. So I think clients who work with us appreciate that. And again, those are CPA firm standards. You won't get those kind of standards. A sole practitioner, like even if you worked with, let's say, someone who had some decent experience before, if they're by themselves and they're telling you, hey, you're working with me, you're getting the best, who's reviewing their work? Even the best CPAs need reviews. That's best practices. Explain why that's so important, Darren.
It is best practice, and it's built in within our firm. Every return that is prepared by a qualified CPA at our firm is reviewed by another CPA. The majority of the tax returns that are prepared by our firm, I personally review them myself. And it's just a second set of eyes looking at the return to see, did we give this client what they potentially qualified for as some tax benefits? Maybe something was overlooked. Just having another set of professional eyes on the return is just our way of helping solidify the fact that we're giving our clients the best product that we can give you, and at the same time, our name is on that tax return. So we take pride in actually giving you a product that has our name on it and our signature as well. And as Bob mentioned, a sole practitioner, even if he or she is very qualified for this, if no one else is looking over their information, I would be a little leery of that because everybody has a tendency to make mistakes. We're all human, but having a second set of human eyes that understands what's going on with that return is even going to make what is on that final product that much more solid.
Yeah, and then they tend to be too busy and too rushed, and that's when they make even more mistakes. So, Darren, I know that even for TradeLog accounting, it's great to have Christy Cam do the work and someone else looks it over. There's a lot more confidence when you include a tax return signed off by GreenTraderTax, whatever the service is. We have clients that after Endicott may come to us and want our opinion about their trader tax status. That can really help them with penalties. Endicott got really hit with huge penalties. Our Forex opinions, you always want to touch base with a quality CPA firm like ours. Now let's go to some questions because actually, Jason, thank you for inviting us to talk about us being a CPA firm. We usually don't do that in our content because we don't try to sell anything, and it was nice to be able to talk about our firm, which is kind of nice. We're celebrating 30 years now this year, and with Green NFH and Darren heading up the new partners, we're going to be here for another 65 years, that's for sure, even if I don't make it the whole way personally, but Darren will. Let's get to some questions now. Jason had emailed us some, and Darren, you have some up on the board as well. So maybe you want to answer some of those. My server's not coming up right now. Let's look on the board. If people sent questions to Jason earlier, try to text them up on the board here. Some you've already answered, I see, Darren. Any of those that you want to talk about, Darren, even though you wrote an answer that you thought were interesting for everyone else to hear?
Bob, go over, one of the questions was, why would I not want to elect mark-to-market if I'm a trader in commodities and futures? Why don't you expound on that?
Well, you know, tax loss insurance is good, but not if it costs you 12% of your income. When you have Section 1256, if you're in the top tax bracket, that extra $100,000 you make, husband-wife return, you're paying $12,000 lower taxes versus securities. The blended 60-40 rate is 12% lower. For 012, it was 23% versus 35%. For 013, it's 28 versus 39.6. So why would you want to give that up just to have ordinary business laws treatment? Well, here's the thing. If you start an entity today and you're trading securities and futures, 1256 contracts, we give you the election for securities only, but we tell you to check back with me in 75 days. Don't miss by one day. You get back to me in 73 days, 70 days. You say, Bob, I'm down 50,000 in futures. I know there's a carryback loss election for futures where I can carry it back 3 years, but only against 1256 contract gains. But I don't have any gains in futures in the prior 3 years. What should I do? I'll tell you to elect 475 on futures to lock it in as an ordinary business loss and then have a do-over entity. But that's an unusual situation. In most cases, we're hoping you're going to have gains in futures, and we want you to get the lower 60-40 rates. And if you bank some gains this year, and next year you have a loss, you can do a 1256 loss carryback election. Again, there are so many rules. Hey, okay, you'll learn the rules. But then there's so much interplay of the rules. Okay, you'll learn that. But then there's so many nuances to it. This is where we earn our salt. We want you to be educated on all this stuff, but we want you to contact us so we have the opportunity to help you. This is when you should be contacting us for a consultation. There's a reason why I'm not on the compliance team banging out tax returns, having Darren reviewing my work, because I don't do it all day every day, and we find if you want to be the best at it, you should do it all day every day. But the other reason is so I'm free to do consulting. I don't want my schedule being tied up. You can get on my schedule. You can sign up for a consultation. Just click on these links. Mindy will get you on my schedule. we will figure out everything we discussed today, we will figure out for you. And if you should do an entity, that's the next step right after the consultation. You upgrade to the entity formation service. Then our outside attorneys do all that work. I do all that. And thanks to Darren, I'm free to do that with you. So that was the answer, a long-winded answer to that question, Darren. We recommend 475 for securities traders. We segregate your investments and only elect it on 1256 in emergency situations. What was the next one you thought was a good one, Darren?
Client is asking, they're just now getting into trading, and they're asking, should they go ahead and set up an LLC from day one, or should they trade as a sole practitioner?
I think that if they are ready to meet our golden rules for trader tax status, now is an ideal time to form the entity. It looks a lot better for trader tax status, which is important because then you can go back 6 months to capitalize Section 195 startup costs, get a $5,000 expense allowance deduction this year, plus the rest over 15 years straight line, plus all your other expenses post-business commencement. Now is the time to do it. If you wait until mid-November, there's too narrow a period through year-end to really claim it. Now, if you have a consultation with me and it turns out that you're not really qualifying in your plan yet and you want to go slowly and ramp up, then let's skip it. Stay an investor this year and maybe consider the entity for a Jan 1 start, a nice clean start to the year. But then you want to make sure there's not a lot of expenses that you're going to miss out on that 6-month rule. So I don't like the tax tail to wag the dog, but I do like to make the right decision with you that you make. I like to help you make it based on your facts and circumstances. And we're not aggressive telling people that everyone needs an entity. It's got to be right for you. But if you have trader tax status, in most cases it does look better, and it unlocks those AGI deductions, retirement plan, and health insurance too. And the other nice thing about the entity is that it disconnects your trading from your IRAs for purposes of wash sales, and that's a huge problem for people. Did you see any other good questions? They're all good, but any informative ones for others?
A question that came up that's kind of common is the taxpayer is deemed to be a pattern day trader by their brokerage firm, and they're asking, does that automatically give me trader status and automatically give me the ability to use mark-to-market?
No, but it's very helpful. And as a matter of fact, I was working with an options trader the other day, and he was trading fine in his IRA, but once in a while he day trades an option because he meets his targets or he wants to get out. And the broker said, hey, you got to be a pattern day trader for that, which means you have to be a margin account, which means that all of a sudden it's a prohibited transaction in your IRA. So then he wanted to go into a taxable trading business. Pattern day trader is to day trade with 4-to-1 intraday leverage. A lot of securities day traders want that. You can't day trade unless you have a pattern day trader account in most cases, pretty much. So I think it shows that you probably could be a business trader, but it just may be that you have those privileges you may not execute. So if you're a day trader or a swing trader hitting our golden rules, you qualify. If you told me, Bob, I'm not a pattern day trader, it might be harder to hit the golden rules. So they're related but not the same.
Okay. Another good question is relating to, you formed a trading entity with internally elected mark-to-market in 2012, getting ready to file the 2012 return. Do you have to file a 3115 with that entity return?
You answer that one, Darren.
Technically not, because that entity internally elected mark-to-market accounting with its first year of conception, and if the trading activity in 2012 was to the point where the entity in itself would qualify as a trader, then it automatically elects mark-to-market accounting by default if it was properly elected within 75 days of its formation. Because that is the election that it's using with its first tax return, it does not have to file a Form 3115 changing accounting method, because you're not changing your accounting method. You're adopting your accounting method with your initial return. So no,
Right.
The only thing I would caution you is if you're asking about filing an entity return right now, your entity return is late, and you need to get it filed as soon as possible, because for every month you're late, you're incurring penalties on that late filed return. So get it filed as soon as possible.
Well, Darren, I think we're at 4:59, so let's say goodbye to everyone. Why don't you say goodbye first, and then I'll wrap up.
Again, I would like to thank Jason and Dave from TradeLog as a whole for inviting Bob and I to this webinar, and we look forward to working with any of you that are on this call via consultation, and if you need a CPA firm to help with preparation, we're here for that also. Go to our website, greencompany.com. There's a lot of information on that. Bob's showing you right now a picture of Mindy Bartholomew, which will answer the phones. Either Mindy will answer the phone or Julie Odom will answer the phone if you call, and they'll direct you in the right direction as far as who you need to speak with. And again, thank you. It's always a great opportunity to speak on this topic because we enjoy it, we love it, and we like to pass it on to those that have interest in it.
Thank you so much, Darren, and I mirror everything Darren said. Thank you all for coming. Thanks to TradeLog customers. We really enjoy working with Dave Ike and Jason Derbyshire. They're a great company. They have an excellent product. That's why we're the #1 reseller of it, providing the accounting services that go with it as well. So we hope to hear from you all soon, and happy rest of tax season. And Jason, back to you. I guess, Jason, you want to make us not an organizer anymore.
Yes. All right, great. Thank you, Bob. Thank you, Darren, both for joining us again today. Even though it is a busy time of year, we certainly appreciate both of you joining us and the fine information that you presented for us today. If you want to learn more about TradeLog software, of course, you can visit our website at tradelogsoftware.com. I know a few people have some questions about TradeLog specifically. You can go to the Contact Us page or to our support center to ask us those questions. And as regards to the recording, you will receive an email within 24 hours with a link to the recording. So if there's any of this session that you missed or you want to listen to again, we'll invite you to do that. So again, thank you everyone for joining us, and hope you have a great evening.